From a top-selling broker in New York City, Noble Black is back with us of Douglas Elliman, and it's great to see you. And it's the perfect time to check in. Welcome.
Thank you for having me.
So, the irony is the fall in mortgage rates going into today. Forget the fact that they backed up a little bit. Call it 610, 615, wherever they are. I had already heard that wasn't doing a lot to stimulate activity in the market, buyer interest and that sort of thing. But you tell me, how would you describe things?
I think Dinah was spot on. I think we're talking about the anticipation, right? So we started seeing, particularly in New York, but I think nationally in hot markets, we started seeing that buyers were coming back into the market, getting busier in July and August.
Okay.
Our signed contracts in July and August were well up over last year for Manhattan. I think Manhattan in August was 30% higher than last year.
Wow.
Brooklyn was 50% higher.
Wow.
So again, it's not that people were jumping in because of lower rates. They see that it's coming. And I think the big news from yesterday, which we were thrilled with, right, is that all of a sudden it's now here. Last year, when we thought the Fed was going to be cutting, people were starting to come back in. It was a busy fourth quarter, first quarter, and then it just went flat. So we started seeing that again in anticipation of this, and now it's here. I think it's going to be a continual.
Are these new buyers paying cash? Are they taking out mortgages, or what? How's that changed?
So the bulk of the market for this past year or 18 months has been cash by far. You're starting to see people start tiptoeing back into financing. Not that those deals are financing yet, but they will be. And I think even the people that could be cash will start choosing again to finance once it gets a little bit lower.
One of the things that's interesting to me is the idea that, mortgage rates are they're kind of like bonds. When the interest rates fall, the price or value of the bond goes up. So doesn't that kind of happen in housing too? When interest rates fall, doesn't that allow the seller maybe to raise the asking price a little bit because
theoretically it could, but I think the larger point is a very well-made one, which is any buyer that's waiting for it to be cheaper down the road with rates coming down, affordability could end up being worse for them if they're 6 or 12 months, right? Because the rates are going to be lower on their mortgage, but you're going to have more demand for more properties, right? And so prices.
So prices will be a demand thing. It's not the seller asking more necessarily.
But this is an important thing and a very curious one. If you are trying to kind of make housing affordable again because you think that's best for the economy, and this is arguably one that pushes prices higher, I mean, how much higher can they go?
So I don't think that this is pushing them higher, right? But I think the short-term immediate effect could be that they go a little bit higher. Long-term, this is still the right direction, right? Lower rates are going to mean that more people are going to build houses, more builders get back in. I mean, we have
more inventory, presumably.
Right. I mean, we have a housing crisis in the sense that nationally there's not enough of that, right? So we need people building more houses. We need it to be easier for them to build more houses. Long-term, I think this is the right direction. But short-term, if buyers are sitting waiting, it's the wrong move, I think.
Go ahead. Jinx.
No, after you. So more buyers may be coming in. What is the tail effect of lower interest rates on builders? Will they be more likely to go out? They can get loans at a better price.
Sure.
So they're going to be able to build, presumably, at a better price.
Sure, and this is all marginal, right? So the lower they go, then you get some coming in, some and some and some, right? And then eventually, when you have more inventory, then the prices do kind of stabilize, or hopefully, I don't want to say go down, but go to a more market rate level with buyers, and affordability certainly gets better.
What do you see? I mean, if you were advising the presidential candidates on what they ought to do in terms of creating more housing so that this mismatch is fixed, what would you suggest they do?
I really think the biggest thing is red tape, right? Like what people have to go through and the hurdles that they have to go through in order to build. All of the regulations and the different, just different things you have to satisfy, whether it's state or national level. There's so many impediments. Besides the fact that it's really hard to make money doing this, right? Like you've got the rates, you've got all of this, you're taking a big gamble, but they almost add a different layer or an additional unnecessary layer on top of that. They say they want more housing, but in some sense they make it
very hard for the builders to build.
Yeah.